The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome to the Diagnostic Trading Hour. I'm your host here, Darrell Martin. And if you have any questions, feel free to give us a call. You can call in at 1-877-927-6648 about stocks, futures, Forex, ETFs, or diagnostic trading in general. And again, that's 877-927-6648. And if you're outside the U.S., you can give us a call at 727-445-1044. Be happy to answer your questions. And going ahead and doing a quick market wrap. It has been a rocket of a day. I mean, man, I've been calling this all week. I've been saying this is going to be one of the biggest days. And, I had on a lot of plays I put on last night. And it's, I'm glad I did it before all the action happened. But even if you missed it, man, the action kept going this morning. And you can see the S&P, just blew past, actually went 2 deviation levels today. And I was actually hoping for a little bit, close some profits out on my overnight trades. And I was sort of hoping a little bit, for maybe a fallback, a little gap fill before it took off, but no chance at all. Things just literally just took off. And we did call a short silver trade this morning. That one's working out pretty well. And have Aussie dollar one on. We'll see how that one ends out for the day. Looking right now at the S&P. And doing a wrap on that, we got the S&P is up 26 points on the day, almost 2%. We got the Russell up 17 points. Again, that was over 2%. And we got the Dow up 221 points on the day, with the NASDAQ up 55 points. Again, that's a 2% rocket increase over yesterday's close. Looking at natural gas, it is up 0.028, so 1%. You got oil. It went ahead and jettisoned on up there with the dollar basically getting kicked down right now. Basically, with everybody pouring their money in the markets and not pouring their money into the bonds right now. That jettisoned the dollar's value down, which means more dollars to pay for oil. So oil went on up $1.26. Natural gas inventory report, we'll talk about that in a second, did come in a little lower than expected, and we'll look at how that affected the natural gas market. Looking over at the metals, we got silver up 1% on the day. We got copper down 1/3%, and we got gold up 11 points on the day. Looking over at the currencies, we got the pound dollar is right now at 38 pips. We got the euro dollar up 31. We got the Aussie dollar 98 pips up on the day, almost a full percentage point. And Aussie dollar is just showing some major resilience today after last night's reports. Looking over at a couple of the other pairs, we can look at, let's check out the ags right now. We got corn up 7.75, basically a 1% move. Soybeans sort of flat, only down a few points on the day, 0.19% move on the day. So that is our market wrap on where the market's at right now. Make sure to give us a call if you got any questions. I want to go ahead and check out the fundamentals. So let's look at the fundamentals. In diagnostic trading, we look at fundamentals. We look at technicals, we look at seasonals, and we look at statistics, also known as diagnostic deviation levels. So let's go ahead and check out our fundamentals. What's been happening today? Well, the GDP for Europe came in at 4 a.m. Central, 5 o'clock Eastern, and that came in at exactly at expectations, a negative 2%, so still a negative GDP right there. But that didn't seem to deter the markets too much. It kept going. But we got French 10-year bond actually came in better. So it came in at 2.21, and this is before all the other news came out, but came in at a 2.21 yield, and that was after a 2.53 on the last auction last month on July 5th, or I guess 2 months ago on July 5th. So that one came in pretty good on the French 10-year bond auction. The Germany factory orders, those actually came in better than expected, so that helped out. And they had the asset purchase facility over in Britain, and that report came out and went pretty well. And basically what that is there's members of the asset purchase facility that vote on the total amount of money to create for the program. The individual votes go into it. It's a lot of meeting minutes and all this other stuff. Anyways, bottom line is it came in right at expectations. What about the bank rate? Well, unchanged. Britain did not change its bank rate. And also, to make sure, let's go ahead and before I forget, I want to look at last night's reports on the Aussie, and their unemployment rate dropped from 5.3 down to 5.1%. So that's really, really good. Their unemployment rate ticking down there, and that's really what led to the big up move in the Aussie. And then of course just got further push with the dollar getting weakened. So it had two things going in its favor. Their employment change number actually was worse than expected. They thought it'd be 5.1 thousand. It was negative 8.8 thousand, but that was not enough to keep it down because that unemployment rate, the overall unemployment rate, dropped down, and so that gave that strength. And then going in and looking at the early morning hours here, we had, we left off there at the bank rate. Britain, like I said, left unchanged. Europe left their bank rate unchanged. That was almost a little bit of a shock. I mean, I'm not completely surprised, but, saying they're going to do everything they can. I think right now they knew, hey, we're going to have this bond program coming out, and I think they're saving that minimum bid rate change for if they need to launch it after the German Constitutional Court ruling. If it doesn't go in their favor on September 12th, then they have room now to move their minimum bid rate down if they want to help spur things. And looking over, let's see, the other thing we got is we had the ADP non-farm employment change, and that was expected to actually be 142,000, and it came in at 201,000 here right in the U.S. And it's pretty big, so that actually happened. And basically what that's doing is it's going in and it's telling you, they pull information from ADP, American Data Processing, and they're the largest payroll processor in the country. And they use the data and they collect it from customers to derive the employment estimations. So to actually have that number come in that much better, it also came in better than expected in August and better than expected in July. So it's not the first time it's come in good, but it definitely continues to have that streak, and it actually is one of the biggest, but not the biggest, over the expected number. So they've been raising that bar, and it keeps exceeding it. So if that keeps happening, well, then that's good for us Americans, right? That's more people getting jobs. Then we followed up with the European press conference, and Mario Draghi, right, and everything he got to say. And, of course, he spoke again later. So he had 7:30, and then we had 11:30. And basically he came in and he outlined the bond buying program, which is really targeted towards Spain and Italy. And now basically what he's done is he's outlined this entire program, but Spain and Italy haven't requested any money for bailout funds because they don't want to meet further restrictions. So, it's really interesting. He said there's going to be no ex-ante limits on the size of the purchases. Basically, they'll spend what they need to. This is going to piss Finland off. Okay, Finland has been very against the bond buying, and they didn't want more bond buying, and so get ready for the fix it, right? The Finland exit. And I think that's going to be coming here in the next 6 months, where they look to pull out from the EU. They don't really need the EU. They didn't need them to begin with. I don't know why they got in. Their people didn't want to get in. They didn't even join until 1995. And, so they were sort of late to the party anyway. And if you look at all the stuff, and basically their money comes from, they're looking over mainly at Russia and the U.S. as their biggest, supplier. So they're really not getting most of their money from imports, exports, whatever, to the EU. And so I definitely see that being something that can even further spur Finland to go ahead and get out. But nobody wants to be the first one to leave, so that's the only thing making anybody hesitate. But as elections approach, that may become a hot topic for Finland. And basically they said they're open to all Euro governments, and again, nobody has requested it. So it's really interesting. He basically said we'll spend as much as we need to, but nobody's asking for the money. So I don't know how. it's one of those, I guess they don't have to ask if he makes such big promises that it drives the rate down, that they're okay. And, we'll come back. We'll talk a little bit about more of that announcement here in a few minutes. But let's go ahead and look over. So we had that, and then at the same time we had unemployment claims. And they came in at 365,000. They were thought to be 369,000. So again, less people filing for unemployment or dropping off the list, whatever, however you want to put that. And so, that's a little better than expected. Not a big difference, but, definitely was a positive number. The big number there being the ADP non-farm employment change number. And then looking over the ISM non-manufacturing PMI, that came in a lot better than expected. It was thought to be 52.5, and it was 53.7. And just in case you don't know, basically what that is, they survey 400 purchasing managers and ask them basically about business conditions regarding employment, production, new orders, prices, inventories, deliveries, etc. And so basically it came in a little better than they thought it was going to come in. And basically that means U.S. expansion is the bottom line of that report. So expansion is a good thing. Yeah, can you believe all this? I'm not giving you the wrap for the week, man. This is the wrap for the day. So an absolutely crazy news day. And went over with natural gas inventories, expected to be at 40 billion, actually dropped to 28 billion. So that means they're being used. And you can see right here, they literally shot up, fell down, and took about half an hour. One of the plays that I've talked about before is either go in before with like a straddle or wait on the announcement and within about 30 minutes, then hop in and buy. And look for about a 50% or so retracement, or check out the deviation levels on that. And if you would have done that, then you could have got a really nice tight entry. And I wasn't able to grab that this morning. I was checking out so many different things at the same time. But definitely a great trade for you to be able to hop in on. And the direction you want to go is usually the direction of the report. So the report was a bullish report for natural gas since inventory was low. So supply low, demand high, increased price. And so that would have given you a great delayed entry on that right there. And let's go ahead and check out the crude oil inventory report. That one came in a little bit a day late, basically, because of the holiday. So that's why. And they expected the inventories to be down 4.9 million from last week. They were down 7.4 million from last week. And that, of course, caused a spike. And in this case, even though the report came out right there, it kept on dropping, even though the inventories have dropped. So I think that, honestly, if we didn't have this massive dollar crush that went on this morning, I think we would have seen oil continue to rise. But with the dollar crush, for whatever reason, oil being a very international thing, obviously, since so much is bought overseas, and Canada, Mexico, obviously the Middle East, and Europe. So with all the oil that's coming out of those areas, that actually ended up it's like it already had its big boom for the day, and it was a boom and a half right there, $2 move. I mean, you're talking about a $2,000 move. And from yesterday's close, 95, over $2, over a $2,000 move on one oil contract in a day. So that's just huge. Then you got Draghi coming out and talking again at 11:30 Central Time. So, he ought to be wrapping that up pretty soon, or we'll be digesting everything he had to say. All right, well, that's our fundamental wrap-up for the Diagnostic Trading Hour. Stay right there, folks. We'll be back after the commercial break.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers, where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, welcome on back here. So, of course, the big story of the day is the ECB and Europe and this big bond buying program. There was only one big dissenting vote, and, it's really interesting how they'll say, this was universal except for one person. Well, or everybody backed it except for one person. Well, that's not everybody, that's not universal. And it was Jens Weidmann, which is president of the German Bundesbank, and he's made his opposition known, and he has publicly been very opposing this entire thing. And Mario Draghi tried to play down the whole, North against the South, which has been a big thing, basically the northern countries being against bailing out all the southern countries. And I think he is playing it down because I think they are sort of pissed off because it sort of is a north versus a south thing over there, where the northern countries are the ones that are being responsible and the southern ones aren't. So the ECB, they left their rate at the same rate, and a lot of people thought they were going to lower that. I think they're going to save that card, is what I think they're doing. And they said they'll buy as much as possible, or, they'll buy as much as needed, which was the big rally, the big news. However, with conditions. So this allows them an out. They don't have to buy them. And the idea that backstop is just there alone really sent Italian and Spanish bonds they just dropped. And so the expectation alone can make it where they don't necessarily have to come in and buy. Basically, they're only going to have to buy if the rates get so high that the countries can't sustain it. So to sustain fear, they'll come in and they'll buy. But if they want them to buy, they have to meet certain requirements. And, Spain has been very vocal, and Italy's been pretty vocal about no way, no how. And even France has come in on this. They really don't want to, come in and make any concessions. So they haven't requested just think about the logic here. It's sort of funny. They haven't requested the concessions, or they haven't requested the bond buying because they don't want to give into the concessions. And so Draghi comes out and he says, okay, well, here's an easy way. We'll buy as many as you want as long as you give into our concessions. Well, we're not going to give into them. Well, but nobody's listening to that part. They're listening to, we'll buy as many as you want as long as you give into our concessions. They don't hear that second part. So this doesn't mean it's resolved. It just means that they can step in to buy bonds if the countries ask and make concessions like the concessions that Greece has made on austerity measures. That's obviously not a popular political choice. Has not worked out very well with them. They had to redo their elections because everything was so tight. The election was so small that nobody won by enough margin for it to be a win, so they had to redo it. And so it's a big thing. But it's a very powerful statement. And everybody hears, we'll buy as much as possible. And I know I'm repeating that, but you just got to read between the lines. They don't want to make any concessions. So the ECB says, we'll buy as much as you want, so as long as you get into concessions, which means they don't have to spend money to do it. But the news, the media, the average person hears, wow, they're gonna buy as many bonds as they're needed to make this thing happen. They'll print unlimited money, sort of like the Fed. So with or without an ESM, sounds good. So we'll see what happens, okay? We'll see what happens whenever these bonds start trickling back up, which they will. And when they don't want to give into the concessions, and then Draghi steps in and he's like, well, we'll buy them if you'll give in. It's not our fault. It's not my fault. I've done everything I can do. At the end of the day, the country still has to say that they will make concessions. So he's made a perfect scapegoat for himself because he's done everything possible within his power to make this happen without putting the ECB on the hook, without the countries making concessions, which he knows most of them won't make those concessions. So it's really just it's what a word game. Just a mind, whatever. But so really just interesting how that's going to play out. And what's really going to be interesting is when it comes out that nobody made concessions and the yields spike. And by the way, if they do make concessions and they do start buying their bonds and they falter on them, they can stop buying their bonds and the yields could go from 5% or 6% to 8 or 9 or 10%. And then you have a Greece on your hands. So I don't know. I don't know if it helped or it hurt. It definitely helped right now. I don't know how much it's going to help when people realize how ineffective it is if countries don't agree. Now, if they get the ESM in place, and that's a big if, okay, because not only does it have to get past the German Constitutional Court, but also Ireland's filing a suit on this, which is sort of funny. Weren't they one of the original pigs, right? Portugal, Italy, Ireland, Greece, Spain. And so they're filing suit against it. And basically everybody has to modify their constitution to get the ESM in place, and they want the thing in place by January. So we'll see if that thing even happens. But bravo to Draghi, the ultimate political media PR move. So we'll see how it pans out in the long run. Stay right there. We'll be right back after the break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And I don't know if you heard about the rumor. It's absolutely hilarious. But there is this rumor going around that Samsung tried to pay Apple the $1 billion fine in nickels. And it literally got spread around by a couple of major blogs, Paper Blog and 9gag. And it went out like all over Twitter and Facebook and everywhere. And there was this whole picture that even went with it. And let me see if I can find the picture right here. Yeah, this is hilarious. There's a whole picture right here that went where they delivered it in dump trucks. But obviously, the story is not true. No company is actually required to accept debt payment in nickels at all, even though it's legal tender. But anyway, it's basically just a little quote that was in there, and but I just thought it was absolutely hilarious that they put that out there, and that the South Korea one got a whole bunch of nickels to the company, Samsung got a bunch of nickels to pay him off. So that would be funny. Actually, when I was in college working on my master's degree, and I was working with a customer, I don't remember what the name of the class was. It was actually a decent class, but it was all about improving performance within offices and all that stuff. Anyways, the guy I was talking about, he actually worked at, the professor used to work at one of the tax divisions for property taxes. And this lady came in to pay her property taxes, and she really did. Like, she brought in not rolled or anything. She brought in a wheelbarrow of pennies for, like, her $1,200 property tax payment. And the employees are like, we refuse to take this. We will not take this. Da, 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 da. And she asked to see a manager. She saw him. He's like, no, we'll take it. He's like, payment's payment. And so those employees that were all being snide about it actually had to sit there, and he actually made them roll the pennies. So that, I don't know how much that helped productivity in the office. But anyways, he was trying to focus on, he actually had one of the highest records of high productivity offices because of all the standards and, things he put in place. But I thought that was hilarious. I literally paid the taxes with wheelbarrow of pennies. And her husband helped her load it up, and they took it over there. But, yeah, anyway, sort of a funny, that's your funny story for the day. But, Apple, Samsung did not pay Apple in nickels. Anyway, so looking back over at the other news that's going on, anything else to really wrap up? The employment obviously came in better than expected. Really, we need 150,000 additional jobs a month just to keep up with the population growth. Teenagers becoming full-time workers, right? So the last couple months we've had that. So hopefully that'll continue. Tomorrow is the big number. So be watching for that number tomorrow morning. And that is going to be coming out the non-farm employment change and the unemployment rate. Both of those numbers are going to be really big. And happening in Canada and the U.S., both numbers being released at the same time. And Canada has also had a pretty bad unemployment. And they've been, sort of ticking up and down. They actually think that they're actually going to get worse. Because last month they were 7.3, so they think they're going to be 7.3 again. They went from 7.3 to 7.2 to 7.3. So the expectation is 7.3 over in Canada. And then here, they're expecting 8.3 because that's what we had last time. And that basically just where the expectation is based on how the reports have come in. The reason that's big is not just the jobs. It's a big influence in the Fed's decision for QE. With a run like this, it's going to be a hard thing to justify QE unless the German Constitutional Court on the 12th blows up the whole ESM plan by saying it's unconstitutional, go back and rewrite it. So without that, and without a big market drop, I think it would be very premature of Bernanke to use that weapon in his arsenal yet. Though they have been talking about getting out in front of any problem. I mean, all they're going to do is they're going to cause a rally, and then a crash happens, and then now they've used their weapon to bring it up. So why not wait until it is starting to, teeter, and it hadn't been really, it's been moving, right? So I think, there is a possibility we could see that later in the year, like in the October or December meeting. But the closer we get to the election, in reality, the harder it is to get to be past that QE, because one side, Obama obviously very for it. Other side, the Romney right camp, they're like, don't touch QE, don't even put your finger on that trigger. We're already at $16 trillion debt. Don't touch it. And it's only getting worse. One of the things I was actually looking at the report, and based on the spending and where we're at right now, we're actually going to exceed our budget by December. So what that means is that they're going to have to raise the budget. Now, the Fed will probably play some games like they did last time to buy a couple months, which will allow the elections to get over and should allow the new president to be put in place and, new Congress to take over, or the current president to be in place, whichever way that goes. No preference there, obviously. But anyways, but yeah, just wait on that one. So if we don't have a united Congress and Oval Office, basically Congress really for the budget there, then we will hit the cap, and it'll go to the last minute and be like a replay all over. So from last year. But we'll see how that goes. November's going to be very telling. So we got that. We got the September 12th, 13th report. We had the Troika coming out about Greece. Do you get more time? Do you get more money? Yes, no on either. They've been basically saying no more money, so now they're looking at no more time. And that will come out of the Troika report again later this month, early October. And, then, of course, there's going to be the big thing is the election. And between now and then, what happens if the yields happen to spike due to whatever fears that take place? If those yields spike, well, the ECB is ready to take in and come in and save the day, but if the countries won't bend, which they probably won't, then now you have a huge issue. So it's still we're nowhere today that we weren't yesterday. It's just now they said that they'll do any amount without worrying about the cap, but nothing has changed. So and like they wouldn't have done it already. So they just basically wanted to give the market confidence that there wasn't some cap on any amount, and so they'll spend unlimited trillions of dollars to fix it, or euros. Sorry. Anyways, but yeah, so that's what we got going on, and that really is the fundamental wrap. But I mean, I can't believe the whole show just about took up the fundamental wrap. But that's how much fundamentals we had going on today on the government news announcements. So really, few things left to wrap up here. I was going to go through. We're going to wrap up through the markets. We're going to look at some deviation levels, and I wanted to remind you of something. If you haven't done it already, if you're going to be in the Tampa area at the end of the month, okay, hop over here on TFNN.com, and then if you can't find it, just use the up and down arrow, click on Free Live Workshop, again, and then go ahead and click here or learn more, either one. You can register. The event is free because Nadex is hosting it, so we really appreciate Nadex for hosting this. Dan Cook from Nadex is going to be out there. Tommy O'Brien is going to be out there talking about identifying the trend and setting up trades. I'm going to come in. I'm going to talk about the diagnostic trading formula and really how to put all four pieces together and how to apply them on the Nadex exchange. And then me and Tommy are going to do a tag team session where we talk about risk and money management application where we're looking at case studies. So it ought to be a pretty powerful workshop. It's just 3.5 hours, and it's going to be held at the Grand Hyatt Hotel there in Tampa. So if you're going to be in Tampa and for that event, then we definitely, like I said, we'd love to have you. And it's going to be right here at the end of the month, Saturday, September 29th. Anyways, so just want you to check that out and see if you're going to be in the area. It's filling up, and I know we got quite a few registrations already. And when it's full, it's full. So make sure that if you are going to be there, that you go ahead and put it in. If you're getting a plane ticket, book the ticket, get on out there, and come in, do the session, fly back out. Literally one-night hotel stay, and you're good to go. So, but we want to help you out and give you just some in-person time to answer questions and everything else as well. But a lot to cover, and really a few hours there, and especially if you're in the Tampa area. So highly recommend it. If you don't have a Nadex account, you need to get one. Okay, it's time to trade up. All right. So the markets are a new environment. It's time to trade up to a defined risk, highly leveraged product. Again, I said defined risk, meaning the leverage is in your favor, and the risk management is in your favor. So that's a good bonus. Usually, high leverage means high risk. In this thing, low risk, high leverage. So on the profit side. So go over here, just click on Nadex on the TFNN.com homepage and sign up for an account. Click Create an Account and go in, and you can get a demo account. They'll give you a couple-week test drive. They'll put some money in there for you, $25,000 of funding money. If you need an extension, just call them, ask them, let them know. They can usually extend that for you. I don't know what their official policy is on it, but I know at least up to this point, they have a lot of people get extensions when they've requested them on the demo accounts. Put in your username, first name, last name, phone number, and email address. Click Apply for Demo. You'll get an email in a matter of seconds with a password in it, and you can go up here and you can log in right away. For a live account, and you really do want a live account, whether or not you decide to trade live, I mean, obviously test it out first on the demo side, but the live account, if you see anything weird in the demo account, you need to hop over to the live account, okay? Why? Well, the live account has live prices. Now, the demo account also has live prices, but it's taking orders from other demo traders. So you got some guy with $25,000 going in there and sucking up all the volume, just weird stuff like that, or messing with the bid-ask spread. And so if you want to see what it really looks like, then go over here, click on this. You actually get immediate access once you fill everything out to the live account. Then you can fund it through eCheck for quick instant deposit there, and it's really fast. It takes about 15 minutes to fill it out, and you have to be a U.S. resident if you do want to trade on Nadex currently. But they're working on expanding out, getting some FCMs on, and taking it to the next level there. But anyway, so they're an awesome exchange. They're in Chicago. They're registered with the CFTC. They're fully regulated. It's the only exchange in the world where you can actually trade binaries. Pardon me there. And you can trade them overseas or in other places, but they're not exchanges. Okay, they're like, we're regulated by the Cyprus Securities Commission, or whatever. Well, good luck. Okay, and $25,000 can get you a binary offshore, website, so where you can start doing whatever you want on it. So, anyways, be careful with those offshore ones. This one is regulated by the exchange. Nadex is not trading against you. Other traders are trading on the other side, and market makers are trading on the other side, but you are anonymous to them, so they don't know if you're winning or losing. They just know that you are buying or selling. They don't know if you're getting in or if you're getting out. They just know you're buying or selling. They see the order, they fill it. And that is a huge advantage when you're trading. Be careful with those over-the-counter products. All right. So checking that out, let's go ahead and look at some deviation levels on the day and sort of where all that's sitting at. And we're going to be launching a new site right here on TFNN.com very, very soon. I know we got all the stuff up. We're just plugging in a few minor last-minute pieces, and we'll have that up and ready for you here very, very, very soon. I know I keep saying it's coming soon, but it really is coming soon. And so checking this out right here, we got the deviation levels for the day. And I'll go ahead and I'll pull these up and we'll look over some of the markets. So over here, let's go ahead. We'll start out just looking at the S&P and where that's at right now. And on the S&P, we had a deviation level of 1418. Well, I think we hit that one. And the next deviation level is 1432. And so it came within like a point of that, and a point and a half, whatever, of 13, basically, about a point or so. 1432, 1433, and chilled out. So that, like, if you blow through the first deviation level, and I'm not, like if you go past, like, the 50% mark, and it looks like it's going to that second deviation level, I'm going to go ahead and call it, right? We're at the top of the day, okay? So don't start buying in expecting another big rally. This is a place where if you want to do a reversal, the market may just stay flat. Now the big, question is going to be what's going to happen tomorrow. So, but I don't see us really going any higher than 14, I'd say 33. Okay, so there may be, a few points left in there. But that really is the second deviation level, and it's not very often that we hit that. We go over here, we can check out the Russell 2000, and also known as the U.S. Small Cap 2000 over on Nadex. And let's see, we went up to 839, and 838.38 was our second deviation level. So basically we just bumped that second deviation level and backed right off from it. So probably done. I mean, there's only so much oomph the market can actually push at one time. And without, about the one time you see deviations, like, really the only time you really see level 3 deviations getting broken, which is basically there's a 99, point, I don't remember right off the top of my head. I want to say it's 99.6 or whatever % chance. So there's like a 0.4% chance it'll break out of a 3 deviation level. Okay? And the only time I've seen that happen is like during October 08. And that's when it broke everything, but it instantly adjusted the next day and worked going forward. Go ahead and stay right there, folks, and we'll wrap up. We're going to have a few more markets and their deviations, see if there's anything left in the day for you.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
All right, it's Darrell Martin right here from the Diagnostic Trading Hour, doing a wrap-up right here on the diagnostic deviation levels. And looking at gold, we had gold set this morning at 17.10, and gold hit 1711.9 and fell on back down. So it made 1710 a great reversal level, already 5 points in the profit there, and so it worked out really well. And go ahead and we'll wrap up looking over here. Let's check out silver, and silver, we had that set over at 32.94. Look at that, 32.99. So not only a great take profit level if you're long, but a great reversal level. If you're long, time to get out and time to go the other direction. So, and if you're not in at all, well, there's your play. And then looking over here at NG, they've got a natural gas. Let's go we'll hop on over. Well, I guess we could have some big plays on natural gas. Natural gas, let's see what we got. 29, 24 was a whole deviation. Didn't even move that with the big move it had today. And 28.85. Pushed that. Half deviation was 28.59. Basically popped that and fell right back down, climbed back up, went flat on the day. And just not as volatile as they were expecting on natural gas. Looking over at oil. Oil, we had a move of 97.20 was our expected deviation level where it should stop, and at right around that point should reverse, hit 97.71. So, again, great level to stop and go in the opposite direction. And then now, if you're going to stop on these trades, and you're going the opposite direction on these trades, okay? You don't just want to do it with an oil futures contract. You can get killed, all right? What happens if it goes 2 deviations, right? Like, I mean, think about that's what the indexes did today. They went 2 deviations. So you need to trade in a place where you can do it a lot easier with a lot less risk, and that's why you want a Nadex account, because it defines your risk. So if you're hopping over and you're looking at, a potential oil trade, and you go in over to your Nadex account, well, you're going to find out that you're going to have low-risk trading opportunities that are set up for you. Whether you want to trade the bull spreads, whether you want to trade the binaries, but, you're going to have those possibilities there. And so what you want to do is go in, and we'll just look this up to wrap up our hour here. And, we had oil. We had that cap. We thought oil was going to stop and turn around, and it came pretty close right to it, 97.20. So let's go here, and we can check out commodities. We can go to crude oil, and we'll see this, what exists right now. But if we're looking at a 97.20, we want as close to that as we can get. So let's see how close we can get. 98. That's pretty close. That's a pretty good one right there. And we got, there's even 97.50 right there. So, see, what time did it hit that? We got to check and make sure. It's 9:55, so it's been 10:55. And that's, let's see, 12, that'd be 11. Okay, so that'd be a little bit late on that one. But let's go ahead. So even though that would have been a little better, let's go ahead and check this one out. And because we could, like I said, we could get pretty close with that 97.20 goal right there. We go in, and let's look at what it looked like. Well, we hop in on that trade, and you can pretty much see right here where we could have got in early in the day. We would actually, let's see here, the charts aren't even fully loading up there. You basically would have been able to get in right around 90, probably 97.50, and on that trade, whenever it spiked up, you got a 97.50. It's now down to 96. You basically made, $1.40. So that's $140 on one. If you're doing 10 of them to equal an oil contract, that's a $1,400 trade. And if you got in at 97.50 with a $98 ceiling, that's a 50-cent risk. So that'd be a $50 risk on one for a $140 profit, or a let's see, I guess that'd go out to a $500 risk for a $1,500 profit. So defined risk can't go against you any more than your maximum risk. You can't get stopped out. Anyways, thanks for listening. Check into the Diagnostic Trading Hour. We'll see you tomorrow.